So it helps you to filter the nonsense. It helps you to know the mistake that you can make with that strategy. So because when you're back testing and you are seeing mistake, you enter a trade, you see that it's trade loss. You analyze, you look at, okay, so if I do this, this will end me losing the trade. It helps you to filter the strategy, to refine the strategy and make it better. So without too much emphasis, I want to let you know that backtesting does a whole lot. In fact, when you finish backtesting, you'll be able to have confidence in that trade, in that strategy. Backtesting does a whole lot for you. It helps you to transform your trading journey. It helps you to refine your strategy, to know the strength of your strategy, and to give you confidence with your strategy. Let's assume you finish your backtesting and you see that your strategy is over 80% successful. That gives you confidence. Now, most successful traders, maybe they must have not told you, those are forex mentors you see, they all have backtested their strategy. They all have backtested their strategy. That is why they can come up to tell you that this their strategy works, this works, because over time, they have backtested it. Now, after backtesting it, you forward test it. Forward test is taking the trade the trade as the market plays on. Now, in real life, in real time, you follow just the same strategy, but you are not taking the trade as the market is playing out. You wait for the setup and enter the market exactly the way you entered it during your backtesting. That is forward testing. So if the backtesting and the forward testing aligns, let's assume you take a trade, 10 trade out of your backtesting, and maybe 6 end up being a winner. And then you forward test it, take 10 trade, and 6 end up still being a winner. You know that this strategy works. It's working before, it has worked before, and it's still working. It's still a relevant strategy. And you know that this is the strength of the strategy. That will now help you to know your risk to reward. If you should be using 1:2, 1:3, and 1:3, that will help you to know what you should be targeting out of 10 trade, where your account should be. All of this, you cannot do this without backtesting, without knowing what you are doing, without knowing the strategy very well, without understanding the strength of the strategy. So you see somebody, professional trader, telling you that, oh, I'm targeting so and so amount of dollar by the end of the month or by the end of so trade. It's because they know the strength of their strategy. They know where their account will be after taking X amount of trades. So you see, backtesting does a whole lot of transforming the kind of person you are. I know you've not seen backtesting like this, but now I'm telling you, I'm opening it up to you that this is the secret. This is what those profitable traders you follow online have done. And some of them refuse to tell you because they will ask you to come and buy calls, come and pay. Yes, no knowledge is free. Even in free time, nothing is free. You have to pay for knowledge. But in this channel, I promise that our goal is to help those traders who are struggling to become profitable traders. So we are virtually giving out most of the germs free. But if you still want me to mentor you directly and guide you and put all these pieces together and show you how I've done mine and give you a trading strategy that actually works, which I'm using, then you can now come privately. We talk on how we are going to do the training. But for those who don't have money, who are still struggling, who needs this channel, just be patient. We'll be dropping them piece by piece, pieces by pieces. More the things you actually need will be on this channel, but it's going to take time. We'll be dropping them bit by bit, topic by topic, but overall we'll still cover them. So that is what backtesting does. It gives you confidence, helps you to know your strength, your strategy strength. It helps you to know where your account should be after taking so amount of trade. It also helps you to know if you're going how long the account is going to grow to within a particular period of time. So that is one thing that you can do to transform your trading journey to become a successful, consistent, profitable trader. Okay, the second thing we want to talk about is journaling your trade. Journaling your trade. You have to journal your trade. And what do I mean? You have to put it down, record it. Guys, see, the forex is a business. It's not a game. It's not a bet scheme where you come and just try your luck. It's not a try your luck something. People who have become making money in this business, who are consistent, they are doing something that you're not doing. The difference between a successful person and a failure is that failure fails and quit. For every person fail, continued and got it right. So there are things they are doing that you are not doing, and that is what that is. They have a journal. Now, how do you journal your trade? Simple. Have a book. Write down your strategy, your entry, your exit, the trades you take. Now, as you are back testing, you are recording down, okay, trade number one, this is how it is. This. Trade number two, this. Do you know what that does? It helps you to remember your strategy. It helps you to remember what you've back tested. If you just back test without journaling, you will forget. You might forget, okay, how many trades did I take? You'll be thinking. Take forex as a business. Have time to plan for your business. Just like the way you open your shop, you have time to plan for your business. This is how you should have time to plan for this thing. It's a business. If you don't plan, if you fail to plan, you plan to fail. That is the business. Forex will welcome you and will eat your money and will not get tired of eating your money until you learn, and you learn the hard way. So we don't want to learn the hard way because we've been there. Nobody told us this. We decided to do the work, struggled, before we actually know that this is what is needed. And since I understood this, my trading life has not remained the same. It has always been good, 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 good. And those in my Telegram channel, they're actually enjoying free signals we post back to back. We have been banging the market recently. Okay, so that is one, backtesting. After backtesting your trade, forward testing it. Two, journaling your trade. The trade you take, both the backtesting and the forward testing, you have to journal them. As you're taking your trade, you write it down. When you're backtesting, you write it down. The pair you trade, the entry, the exit, when the trade hits stop loss, when the trade hit take profit, you write all of them down. As you write it, when you've gotten your number of trades you want to take, I've told you minimum of 10 trades backtesting, minimum of 10 trades. Then once you've gotten to that amount, you start forward testing it. You can use your demo account to be forward testing it, taking it. Once you get an entry, you take the trade, you journal it. When the trade plays out, either it hits your stop loss or you take profit, you journal it as well. As you do that, you do it to equal amount of the backtesting you did. Then when you've completed it, you now analyze the two data and see if they are aligning. If your backtesting gives you 9/10, forward testing gives you 9/10, you know that you have a strategy. This is the strength of the strategy. If backtesting is giving you 8/10, forward testing is giving you 9/10, they are still in the same category. It shows that it's good. The only way where you have discrepancy if backtesting is giving you 10/10 and forward testing is giving you 6/10 or 5/10, then there is a problem. There is a mix-up somewhere. You have to do it again and know that you are following the strategy, the rules, exactly as you followed it from your backtesting stage. So journaling your trade is another thing. Journaling your trade helps you to know, to remember, to have a database of your trading strategy. So you can actually hand it over to your student, your peers, whoever. And once somebody see your trading plan, the person will know that you know what you're doing. You are in for a serious business. Now, I just want to show you. You see this stuff? I put this stuff, I put it anytime I'm trading. It's in my room. I paste it somewhere. I also have it. Now, look at this. If you look at the write-ups, no, the screen is not coming out. The screen is not coming out. This is how I journal. This is just a pair. Now, if you look, Euro USD, you have pair, time frame, risk to reward ratio of the trade, number of pips that I was risking in that trade, number of pips I've targeted in that trade, the result, whether it hit TP or it hit stop loss, and how long did the trade take to play out to either hit TP or take profit. My strategy is once I enter a trade, I am hands free. I don't touch the market again until whether the strategy, the trade hits take profit or it hits stop loss. that is when I'm closing out. So I have my trading plan. This is for Euro USD. I know my trading strength with Euro USD. I know that if I'm trading Euro USD with my trading strategy, I have, this is it, I have 8/10. My trading strategy is 8/10. That's the strength of the strategy. 8/10. So out of 10 trade, I will win 8 trade. The journal, the stuff is here. I wrote it down. And I know how many days my trade is supposed to last. Because if all of the trade takes, most of my trade takes 2 days. 2 days, 2 days. Only few takes more than 2 days. So I know that if I enter the market maybe on Monday, I know by max Wednesday, I should be going out of that trade should be hitting my TP if it's going in my direction, because most of my trades goes in 2 days. So I arranged it, the pair, the time frame. That's the time frame means the time frame I'm using to trade, where I got the signal. If I'm trading with 4 hours, 1 hour, whatever, I put the time frame here. Then the risk to reward, is it 1:2? Is it 1:3? Is it 1:4? I put it here. Number of pips risk. How many pips was I risking in that trade? Then number of pips targeted. How many pips am I targeting in that trade? I wrote it down. Then the result. The result has to do with whether it's won or it was a loser. Then how long did it take? Did it take 2 days? Did it take 3 days? Did it take 4 days? Did it take 5 trading days for the market to hit my TP or my stop loss? All of this is here. So when I'm trading, especially if I'm trading Euro USD, I know that this is what it is. This is how long. So if the trade is staying more than as expected, I have a cause for worry. I have to go and look at the market again, look at whether the trend is still healthy or it's time for me to go. This is nobody will teach you this. No signal group will teach you this. This is what you have to do. This is what you have to do for you to have that confidence you are looking at. In fact, if you do this, that trading strategy you've been trading, that is today you win, tomorrow you lose, you're not having confidence. Sometimes you enter a trade with fear. But when you have this and journal it, you will see the level of your confidence. We boost. I'm telling you this from my heart, and I'm telling you because of experience. Go and try it, and you come back to thank me later. So this is the tip I want to share with you. These 2 things. Go and apply these 2 things. Go and backtest your strategy, forward test it, and then journal your trades. As you are backtesting and forward testing, you are journaling your trade. Write it down. The pair, the risk to reward, the time frame, I have the confirmation of the signal, the number of pips risk, number of pips targeted, results, how long did it take? All of this should be in your journal. If you're not ready to do this, if you're not ready for Forex, Forex only blesses those who work hard. Not just working hard, working smart as well. You don't want to have a strategy and rush and start trading. That strategy that somebody shared you, your mentor gave to you, or you learned in YouTube, why not go and backtest it? It will not give you that is trading is confidence, and it will also help you to refine it, to know what works and what doesn't work. This is the tip I want to share with you. So guys, from the previous traders episode, I want to thank you guys so very much for the way you share the video, you watch the comment and all of that. But please, some of you are watching, you're not subscribing. Please, you want to, if you like what we are doing, please kindly subscribe. You want to see the subscription to increase, and please keep sharing the channel to other your friends, especially those who are struggling. We got your back. So guys, for those of you in my Telegram channel, you're actually enjoying the signal I posted yesterday, Euro USD. So I want to share my screen with you guys now to tell you why I entered the trade and if I'm still holding. Now, from the last traders episode video we did, I showed you my trade, the GBP USD, which I still using my normal strategy to trade, and that trade actually hit our take profit. So today, I'll be showing you my screen. This is my screen. This is the trade we took, Euro USD. Now, I told you guys that you have to wait. If the market is consolidating, what you look at for is a stop hunt, like a liquidity grab. And that liquidity grab actually happened here. I was looking at this pair, then the USD was very strong. So a lot of people were selling this market. I was observing them. I knew that this market is not going to move any low, any thing below this region. The reason why, even when it broke this consolidation zone, I told you that there must be a transition. If the market want to change direction, there must be a transition. And what is that transition? The market will enter into transition. It will enter into a range or a channel. Once it enters into a range or a channel, you see that the trend slows down. It will be going up and down. It's ranging. And then before they now put to the direction they want, they will stop hunt. And this is exactly what happened. This, I've been preaching about this. Even the last video I showed you, my GBP USD trade, the same strategy, the same thing. This liquidity graph came down as the market was ranging within this region since on Monday this week. The market came in, the market has been ranging, and then I was observing it. Then the market broke the range here, and then as it's going down, the question is, how is it going down? Is it going full speed? Or is it going jerky? Is it going slow? The market slow? As you can see, the market was going down, but this was not going down aggressive. You are not seeing this kind of candles, massive candles like this. You are seeing small candles. Once you see that coming, approaching your support level, know that that trend is not healthy. The market has higher possibility of reversing from the support level because if it were to break, you'll be seeing aggressive so that the selling strength is healthy and it's likely to break. But it's not breaking, it's just going. And then when the market was consolidating all of this, come Tuesday, towards evening, Tuesday, by 4 p.m., the market broke and then range a little bit below. Then once the market broke and I started seeing this rejection with all this small candle, I know that this is just a liquidity grab, that the market is going to go back. So I was waiting for that aggressive, the big boys to come back. And then the big boys came aggressively with this candle. So at the close of this candle, that was where I call out this trade. I pulled the trigger and then the market ranged again. After this candle, this next candle, it gave off profit. Market came down, range. And today, from 12, I think that was around 10 a.m. to 10, 11. By 11 a.m. going to 12, the market broke this range. And then we are seeing the move has just begun. So if I go to 4-hour candle, 4-hour time frame, you will see that this is where our take profit is. Mind you, this is a 200 pips trade target, a 200 pips trade target. So the market just started our move. And if you look at the candle, the size of this candle, it still shows that the trend is healthy. And if you look at the left side of it, there is no obstruction anywhere. So I don't see the reason why the market is not coming here. Though it's going to take a little bit time. It might not be today. Maybe today is just Wednesday. So by Friday, we should be looking at the market coming here before doing anything change of direction. But however, we are looking at it as it's approaching that environment. If the volatility is becoming weak, then we know that, okay, it's time to go out of this trade and take whatever the market has given to us. But if the trend is still heavy, we will just leave this market and then take profits, allow it to hit. So for those of you who are still on this trade, who took the trade as I call them out, we are still holding this trade with me. We are going to hold this trade until we see otherwise. But from what we are seeing right now, I think the trend is still healthy. It still has some rooms to still pull to the upside. So we're holding, and then we are good. So thank you very much, guys. I said let me come and share this with you. I thank you for staying through to this video. This is going to be a very short episode, but a very short but informative episode. So whatever I've taught you here today, please go back and try it, and you'll see that your trading life will never remain the same. When I discovered this, my trading life changed. My confidence boosted. And since then, the rest is history. So guys, if you want to be like me, if you want to get to the level where I am, follow what I'm telling you. This is the real deal. If you're not ready to put the work, please, Forex is not for you. Go and look for a job. Go and do other things. Okay? But if you are ready that you want Forex to be the next big thing in your life, you have to sit down, keep your chairs down and do the work. Do the prep. The prep is 80% this business. Forget about the trade you take. That is the business is in the prep. If you do the prep, if you prepare before taking those trades, you have edge because you already prepare whatever the market gives to you. This is what I'm executing. If the market does this, I do this. If market do this, I do this. That is how professional traders think. They know when to exit the market. They know when to hold on to the trade. All of this, you cannot get this knowledge without doing the prep. And the prep is what I've just taught you today. So go back, try it, backtest it, and come back and thank me later because I know somebody will find value in what I've just said. Please keep on sharing this channel and keep subscribing. I love you guys, and I will keep updating you, keep giving you the tips that you need to change your trading life. And I'm signing out right now. Peace out.